Hello everybody. In this time we are talking about operating budget. An operating budget is a detailed projection of what a company expects its revenue and expenses will be over a period of time. Companies usually formulate an operating budget near the end of their operating year to show expected activity during the following year. An operating budget serves as a goal and financial plan that the business expects to achieve. An important distinction to make is that a budget is not a forecast. Budgeting quantifies the expected revenues and expenses a business wants to achieve. Forecasting estimates the actual projected financial reality for each upcoming period and is influenced by actual activities. And then, what is included in an operating budget? An operating budget is generally made up of several different components, such as the first, projected revenue. This refers to the amount of money a company estimates it will earn over a given period. Revenue is projected by analyzing the figures from past years or by analyzing the amount of inventory relative to the price points at which the inventory is sold. And then the second, non-cash expenses. These are expenses that don't involve a payment. They affect a company's revenue but not its cash flow. Companies may incur a variety of non-cash expenses including amortization, compensation from stocks, especially depletion and depreciation. And then the third, fixed costs. These are regular business expenses that tend not to fluctuate too greatly from year to year. Fixed costs include rent, utilities, and business insurance, as well as the cost of purchasing, renting, or maintaining equipment. And then, fourth, non-operating expenses. Expenses that are not directly related to daily business activities are considered non-operating expenses. They include things like inventory, write-downs, and inventory write-downs, interest payments, and costs from asset disposal. And then fifth, variable costs. Variable costs tend to move relative to the business volume. The cost of labor, whether that's domestic or raw materials, and transportation expenses are a few examples. And then how to create an operating budget. The first step, forecast revenue based on past sales trends. This is difficult if you're a startup because you don't have a history of sales from previous years to evaluate. If that's your story, look at sales numbers for your competitors. Their financials will be available online if they're public commercials. If your company has been operating for a while, use your own numbers such as income statements. And then second, forecast prices for relevant goods and services. Prices are going up and will likely continue to rise at least in the near term. Price all your goods and services at their present level and then apply a multiplier to them based on the current rate of inflation. You'll be doing this now for your costs, but you should also keep it in mind when you set prices on your company's products and services. And then the third, project expenses for each department. Breaking costs down, such as administrative expenses or capital expenditures by department, is one of the most effective ways to handle expense management for small businesses. Each department should have its own operating budget and a person responsible for managing that budget. This creates accountability within that department and gives you a more macro approach to the full company operating budget. And then fourth, analyzing the impact of industry and economic trends. Manufacturing and distribution can be affected at any time by random events like material shortage across the globe. Are these industry or economic trends that could affect sales volume, the cost of raw materials, and revenue for your company? Look at this objectively because the next steps are dependent upon the research you do here. And then fifth, calculate the total necessary budget for operations. Add it all up and you'll have your total operating budget. Double check the numbers, be prepared to make changes as economic conditions evolve, and schedule regular budget reviews to make sure you stay on track. Of course, you'll need more than a simple spreadsheet to do all that. In the last section, we'll go through solutions for managing your monthly and annual operating budget. And then we move to finally operating budget methods. There are several methods for calculating an operating budget, including the first bottom-up approach. This approach starts by calculating the expenses for each department or unit of the organization and then aggregating them to get the overall operating budget. And then second, top-down approach. This approach starts by estimating the overall operating budget and then breaking it down into expenses for each department or unit of the organization. And third, zero-based budgeting. This approach starts with a clean slate and builds the budget from scratch, taking into account only the essential expenses required to achieve the organization's goals. I think it is enough of this session. Thanks for watching, and don't forget give this channel with your like, comment, subscribe, and share. Thank you.